Okay, guys, it's Sunday, April 27th. I've been going back and forth in my head here whether or not to make a video here showing you how I update my charts. I don't do it every week. I did the weekly recap yesterday, so you could check out that video here on YouTube. And again, if you get some value from my videos, please subscribe to the channel, like the videos, and put a comment down below as well. But this would be the what I call the outlook, kind of the weekly outlook for the week of 4/27/25, where I go in and I mark up my charts on the 4-hour time frame, just checking all the alerts from last week just to see if we have to change anything, right? So let me just share my screen here real fast before I forget to. Okay, so this is my 4-hour, my damn near 100% objective 4-hour supply and demand trade plan PDF file, which you should have a copy of. If you don't, it'll be in the link in the description area of this video, or you can email me or contact me to get a copy of it. It's damn near 100% objective. So we use the indicators and show you right here, DeLorean EMA indicator to determine the trend bias on the 4-hour time frame. There's rules for bullish, rules for bearish, and then we use the Lux Algo Smart Money Concepts indicator to identify the best supply or demand zone to trade from, right? Demand zones are for bullish outlooks, and supply zones are for bearish outlooks. Click this image right here. That'll take you to the video on YouTube that explains everything. Of course, once that 4-hour zone is hit, then we drop down to the 1 hour, wait for an impulse candle that creates a buy or sell shift using the 513 EMAs. And then once you get that buy or sell shift on the 1 hour, you drop down to the 30-minute and check for a change of character. If you don't have one, you wait for a change of character. And then once you get that change of character, then you can use your fib. You could draw your fib from the high to the low on the 1 hour time frame, right? So we're trading on the 4 hour, waiting for price to hit our 4-hour zone, supply or demand zone, right? Going with the trend bias, the current trend bias that we determine using the 3 EMAs, the 50, the 200, and the 800, right? Now, the two confirmations, once your zone gets hit, drop down to the 1 hour, wait for the buy or sell shift. Buy shift if you're buying, sell shift if you're selling. Then once you get that, you drop down to the 30, check for the change of character, market shift, or the choke, as we call it, right? If you have both of those, then you can draw your fib on the 1 hour, right? And you're going to go back to the 4 hour, which the fib should, 9.5 times out of 10 looks exactly the same on the 1 hour as it does on the 4 hour. Sometimes there's a slight difference because of how the candles form. But most of the time, it's exactly the same points. But then you're going to use the 4 hour to, to determine where to put your stop loss as well as your take profit. And you're going to use that. If you're buying, you're using that 4-hour demand zone, the bottom of that for your stop loss, and then your target is the beginning of the next supply zone. And the indicator is giving you all these, right? And again, 9.5 times out of 10, it's correct. So it's damn near 100% objective where there's no subjectivity to it, but there is some, and I explain that as I go through the weekly recap and also this outlook here. Now, once you have your stop loss, your take profit set, you want to enter the trade, and we did change this just recently. Now we're using, instead of the 61.8, right? We're using the 71 fib or the 78.6 fib, right? And so you're going to use either the 71, the 78.6, or you're going to use a refined 30-minute or 1 hour supply or demand zone that gets created from the change of character, right? And the idea is to use the one closest to price, which would be the 71, as long as you have at least a 1-to-2 risk to reward ratio on the trade. If you don't, right, then you have to try to enter on 78.6. If you still don't have a 1-to-2, then you have to find the 30 or the 1-minute refined supply or demand zone. And if that still doesn't give you a 1-to-2, then you just would skip that trade. Okay. So that's basically what you're doing. So now, right now, what I want to do is go into trading view here. We're just going to go through the pairs on the 4-hour time frame, and we have the Lux Algo Smart Money Concepts indicator on, giving us our order blocks, which are supplier demand zones, and we have our DeLorean EMAs, which give us our 50 EMA, which is the teal, the 200, which is the gray, and the 800, which is the blue. So on OddCAD, price is below the 800, the 50 is below the 200. That tells us the current trend is bearish. We could see that as well just looking at it. And it gives us, the indicator gives us this order block up here, which is a supply zone. And that's where we have our alert set. Okay. And then I highlight that area as well so that when I turn the alert off, I turn the Smart Money Concepts indicator off, I can see it. And then I stretch this out to the high of that wick, which the indicator did not do that. Okay, so let's just roll through here again. If these pairs are red, that means I've identified a bearish trend. If they're blue, we've identified a bullish trend on 4-hour. If they're yellow, that means the 4-hour zone has been hit. If they're green, that means the 4-hour zone was hit. We got the first confirmation, which is buy or sell shift. We got the second confirmation, which is the change of character. And we now have a opportunity to set a limit order to enter that trade, right? We've drawn our fib. We've identified our stop loss and our take profit. We've identified our risk to reward ratio, right? It's at least 1 to 2. And now we have our limit order set for that pair. And then that gives us a green flag. And then once we have a purple flag, that means we have entered into a trade and we're currently in that trade. Now, I'm not able to take all the trades on my demo account, but I keep track of them, whether I'm able to take them or not. Now, currently, if you watch the recap from yesterday, you'll know that I have a position right now open in EUR USD, which I'm currently up just about 1/3 of 1%, $332. And we have a pending order here for GBP CAD, which we have a buy limit in for that. Okay. Also, if we look at our balances here using this strategy, see something here, closed positions. If we look here, we'll see that the last 7 days, we're up $332.52, right? And of course, the last 30 days, I'm sorry, I'm looking in the wrong place here. Let me look at that one more time. The last 7 days, we are actually down a little bit because this trade is still open. In the last 30 days, we have a profit of $4,445. Okay, so one more time. Let me look at this last 7 days. We're even because we had no trades win or lose. Last 30 days, we're up 4,400. That's on $100,000 demo account, guys. And this is a demo account. It's not a live account. And it's not a funded challenge or a funded account either. Okay, so let's get back here to finish going through the pairs here real quickly. So AUD, JPY. Okay, you can see here, this is bearish, right? And our supply zone alert is set right here. Again, I've made this zone bigger to accommodate that wick on that candle, right? The indicator didn't do that, but I do that because we have to use that wick for our stop loss. AUDNZD, this was in a downtrend here. We had this 4-hour zone identified here. Prices hit that zone. So now we're going to, this week, we'll drop down to the 1 hour. We'll wait to get that sell shift and that change of character and see if we have an opportunity to take a trade here before it decides to just invalidate this zone here and go right into the next zone. Okay, AUD USD. This one, so, price is above the 800, the 50 is above the 200, so it's clearly bullish. However, we don't have any alerts set on it because our demand zone is all the way down here. And obviously for price to work its way all the way down there, it would go below the 800 EMA. It's just kind of gone up above it now. So it would go down below it, obviously, get down here. And so that would invalidate the trend at that point. So we're not worried about that. CAD Chef is one that this had hit this 4-hour zone right here. As you could see, it actually went off because price went through it. And so this one here, we will have to reevaluate what to do with it. But right now, we just have the green flag on there because the zone was hit, but it seems like this 4-hour zone is invalidated. And actually, we do have an alert all the way up here at the next, supply zone, which is right now the 800 EMA is kind of going through there. CAD-JPY, this one is bearish, right? And it invalidated this zone right here that we had set up. So the next zone here for that, we already have it highlighted there. Second here, our next zone would be right here. And so we put it like that. Now, some people might say, hey, Bill, look how this came down, and it looks like it's already mitigated that zone. Well, that happened before you had the break of structure. So when that got up to there, this was not a supply zone yet. So it doesn't become a supply zone until you get this break down here, and then that comes on. CHF-JPY, this one is bullish. We're looking at this zone down here right now, although more than likely price drops below the 800 to get there. EUR-AUD, this one is bullish, right? Price is above the 800, 50 is above the 200, and the indicator is giving us this demand zone down here where we have our alert. EUR-CAD, this was a trade from last week where I believe we were able to get out of this trade with a 1% win, and then the other half of the trade broke even. So this one, I still have the flag on it here, but this was a trade from last week. So if you watch the weekly recap, you'll see that analysis. Okay, EURCHF, this one is, so this one here is not, there's no alert set for this one. There's no clear trend here because price is below the 800, which makes it, or actually it is bearish. So it is bearish, but again, in order for price to get all the way up here to the supply zone that the indicator is giving us, it would have to move well above the 800, which would invalidate the trend. EURGBP is bullish, and we have this demand zone down here. EURJPY, this one is now bullish, and it is giving us a zone right here to trade from. So this is something new here. We're going to highlight that zone, and we will set an alert right at the beginning of that zone and see what happens. So this would be bullish. EURNZD. EURNZD is also still bullish, and we're looking at this zone down here. This is one of those situations where you kind of have to, if you look at this here, you see there's two different zones. There's this supply zone here, or demand zone, and then another demand zone right below it. So what I do is I highlight that whole area, and so I would use both areas combined there. And so the stop loss would go down below this second area here if we decide to take this trade. Because they're so close, there's a better chance the price will move into that other zone. EURUSD, this is the trade we're currently in. GBP-AUD, this one is bullish, and we have this zone right here. identified for our demand zone. Trying to see why that alert is set. This alert should be set at the beginning of the zone right there. GBPCAD, this is our current trade that we have a buy stop order set for, right? We're waiting for price to come back to that 71 zone right there. This gives us a 2.62 risk to reward on this trade. See, we're using the bottom of our demand zone for stop loss, and we've identified this supply zone up here. We use the beginning of that supply zone for our take profit, and that gives us a 2.62. GBP NZD. Okay, this one price is above the 800, giving you a bullish inclination, but the 50 is below the 200, so we're not going to give that a flag or set any alerts. GBP-CHF is bearish, and we have this supply zone right here. Now, again, this is another one where there's a supply zone very close to it, so we're going to extend that out so that we would extend that, and we would include that area there in our stop loss. Would go up above here if we decided to get in the trade here. GBP-JPY is also bearish here, and price is working its way up to this zone right here. GBP-USD is bullish, and we have this demand zone that's very close to getting hit. It almost got hit here, not quite. NZD-CAD, NZD-CAD. All right, where's our 800 straight across there? So this is currently bullish. And we do have this zone here that was already hit. Okay, so this zone was already hit. So we're just going to wait and see what happens with this one. We don't have any alerts set. We don't want to trade from this zone again. You see, you get a break of structure that makes this a clear demand zone here, right? And let's see something. See how that shows up on the indicator, and then price comes back and hits that and then goes up. But notice how there wasn't a lot of room here between this demand zone and this supply zone. So this was a trade that we probably wouldn't be able to take because we wouldn't have gotten the correct risk to reward ratio, right? Let's just say we buy here, our stop loss goes here, right? And if our take profit goes at the beginning of that zone, even if we get in right here, that's a 1.73. So depending on where our fib was at, let's just draw a quick fib here. So we would probably be able to take this trade here at the 71. That would give us a 2.1 risk to reward on that trade. So we would be able to take that if it would have given us the buy or sell, the buy shift and the change of character inside of that range. But if it would have been outside of that range at all, there wouldn't have been enough room there to take that trade. NZD Chef. This is bearish, and we have this zone right here. And we've extended that zone to include the wick from that candle right there. NZD JPY. Okay, this one was bearish. Now what's happened is this 50, you could see prices below the 800, and the 50 was below the 200. We had this supply zone right here, and we have our alert set for that. Now what's happened is, in order for price to get up to that supply zone, sometimes you'll get the 50 cross to 200, right? Either up as it's going to a supply zone or down as it's going to a demand zone. Now, that's still okay to take that trade, okay? But the other thing you got to watch here is that the 800 is sitting right here as well. So there's a chance that price could close above the 800. And if that would happen, then that would definitely invalidate the trade. NZD USD. This one is bullish here. We have a zone all the way down here. We don't have an alert set. We're just going to shut this flag off because obviously In order for price to get all the way down there, it will drop below the 800. Now, if price does decide to move up, though, then we may get a new supply zone right in here somewhere, right, that we might be able to trade from. And that obviously stays above the 800. But we don't have that right now. USD CAD is bearish. And we have this demand zone, I'm sorry, supply zone right here. Supply zones are for sales, demand zones are for buys, right? So we have this supply zone right here. I do mix them up sometimes, guys. I'm sorry. We're waiting for price to come back to there. USD CHF, this was a current area where this was a valid supply zone here. The price went through it, so now it's invalidated. So we'll need to wait and see what we want to do with this trade. Now, the reasons for the invalidation could be just because of all this imbalance here. You can see all this imperfect price action here, or imbalance as we call it, from there to there, from that wick, from this wick to this, well, not that, but from this wick here to this wick there, because price moved down so fast. Same thing here, same thing in here. Okay, so that may be the reason why price moved up there. But I don't like to see, all these candles like this closing above the zone. I mean, if it's just 1, 2, or 3 candles and then it reverses, that's a little different. Right now, you have all this structure here above this zone, and this kind of leads me to believe that even if price does just pull back into there, right, that's just going to be kind of a little bit of a reversal, and then it's going to move higher. So USD JPY, now this one is still in the supply zone here, so it didn't invalidate the zone. So we're still looking for this. Okay, you can see this is right here is where price moved into that zone. And we drop down to the 1 hour, you could see here that you do get that sell shift right there. Yeah, it's right there. Drop down to the 30-minute though, and we just don't have any change of character, right? So there's no change of character, and price then just continues to go higher. So we need to wait for a change of character. As you can see here, prices with the 5s back up above the 13. So we need another sell shift there to happen. And then again, we would look for a change of character on the 30-minute after that new sell shift occurs. And then if that happens, then we have our 2 confirmations to set up or do our fib, and then set our limit order if the risk to reward works out for us. Okay, guys, so that is the weekly outlook for the week of April 27th, 2025. Like I said, currently we're in a trade right now, right? We have one open trade, one open position in EUR USD, which is currently a little bit in profit. And we have a pending buy limit order set on GBP CAD. Okay, any questions, guys? Just get back to me again. This is a completely free trading strategy for you. My damn near 100% objective 4-hour supply and demand trade plan. Again, it's completely free. You do need to get you will need an upgraded TradingView account if you do want to be able to follow all the pairs like I do and set alerts for all the pairs. If you don't, then you could just stay on free account. But the essential account gives you the ability to add more than one indicator, I think, and you do need more than one indicator. Otherwise, you have to keep, taking one off and putting the other one on, right? So, so it's a little bit of a pain in the ass if you just use the free account, and you only get 5 alerts with the free account. So the essential plan for $14.95 gives you up to 5 indicators and 20 alerts, which should be enough for you. But this does take a little bit of time, like you've seen here today. It takes about 30 minutes a day to check your charts, draw your zones, draw your fibs, set your limit orders. If you're looking for something that's more done for you, we do have educators that do live training, and they also send trade ideas. right, to an app on your phone, right? You have to become a member of our company to get that. Here's a video right here, tells you everything you get when you become a member. Uh, Here's a video to our secret podcast for more information on our company and our community, and also a video here for updates. This is my YouTube channel right here that you definitely need to subscribe to. So have a great week, guys. Bill Soriano from Pittsburgh. Have a great week. Happy trading.